Welcome back to Rockstock Channel. It is Friday, March 3rd, and we have Matt Fernley on the program here. Matt, you've been on the show a couple of times. Actually, you held the title for having the second most viewed video. Last year, you said, how high can the lithium price go? And, you said it was very high, and it was an extremely prescient call. And we are here today with the spot price down 30%. I'm not sure what we're going to call this video, but we were thinking about Tom Petty's free falling. But you think that we're poised for kind of an imminent turnaround or bottom or leg up. So we're going to start with that. In your battery materials review, you have a recent feature article that was just published, and it talks about cost curves and the like, and what's underpinning that view. So let's start with that, but please introduce or reintroduce yourself and your recent, publications you put in the market.
Sure. Thanks, Howard, and thanks, Rodney, for the invitation to come on again. I'm disappointed I've lost space in another second most viewed podcast, but we'll have to see if we can do something about that. Yeah, so Battery Materials Review, monthly subscription periodical focusing on the entire battery materials space. And we've just put out our 2022 yearbook, which is free on our website, free to download on our website, batterymaterialsreview.com. And it's basically has a number of articles focusing on aspects of the industry that we think are really important. And I just wanted to put something out into the market that summarized where the market is at the moment, because I think we're at a really important point of inflection in the market. And I think it explains our thinking on a number of the sort of key aspects that are impacting the market. Obviously, we're talking about lithium here, but we do nickel, we do graphite in a lot more detail, which I think is a really interesting space. We talk about the anode and the cathode market. We talk about capital capacity of the industry, which I think is a core consideration. And we go down and talk about the EV space, the ESS space, which is a growing area. We talk about recycling, all of these issues, which are really, really important to the market at the moment. We've got essays in them in the yearbook, and I think it's just a really nice sort of, this is where we are at this moment in time, and this is potentially where we could be. That's me. The question,
and it's free. This yearbook is free to download.
Free,
so
absolutely free. Just get in there and fill your boots. Yeah, absolutely free. So yeah, and that you don't get that very often. Let's face it. So
in lithium, there is a free lunch, and I think it's a great document. But your battery materials review, which is a monthly, is not free, but it is a modest. What does it cost per year?
It's £480 for individual investors, people who are interested in the sector. It's a little bit more for a corporate membership, but £480 for individuals. So yeah.
Okay, so about a pound and a half a day, less than a cup of coffee. You can get the battery materials review and a lot of interesting articles and data, in that. And your podcast, you have the Recharge podcast once a month, is also a great listen. On my Saturdays and Sundays walking my dog, I am listening to that once a month. So the feature article in your most recent battery materials review, we're going to start with that. We're also going to cover Tesla Battery Day, Albemarle Marvel joint venture restructure, the ARK equity scoreboards as for February, recent developments in U.S. politics, the start of construction in the U.S., at Lithium Americas and a few other things. But start with the article and why you think this 30% downdraft we have, is poised to slow, stop, and reverse. And I don't know if you believe we're going to higher highs on lithium, but I don't want to put words in your mouth. Just let us know what you think.
Why not? Okay, so I think the reason why I think the spot price today is about $55 to $60 a kilogram. That's obviously down from $80 odd a kilogram at the back end of last year. I actually think that we're closer to the end of that move than the beginning. The reason we are comes down to sort of analysis of marginal cost of production. Now, for people who don't have a commodities background, the marginal cost of production is the level on the cost curve where it becomes too painful for producers to carry on producing and start to see production cuts. And in my career, 20 odd years, that's been around about the 65th percentile of the cost curve. Now, I think the big issue here is a lot of people have a confused view of what the marginal cost of production is in lithium. If you looked at the lithium industry in, say, 2018, 2019, the marginal cost producer was the Latin American brine operations. The guys like SQM and Albemarle that are producing, very low cost from the sort of Chilean and potentially the Argentinian brines as well. But the marginal cost producer now is not, because we've seen very, very substantial changes in the lithium market over that time. And one of the most important changes started to come in at the beginning of last year. Because of the tightness in the industry, the hydroxide converters in China were forced effectively by the Spod con producers in Australia to renegotiate their contracts. And they had to renegotiate their contracts, most of them pointing backwards at the quarterly spot prices of spodumene concentrate. Now, the reason that's important is because over the last sort of 6 months, those have gone very, very high indeed, which means that the merchant converters in China, which represent about 25 to 35% of supply at the moment. And when I talk about merchant converters, I'm talking about the converters who don't have captive mines. So the guys who are buying spodcon on the spot market. And if you're buying spodcon in the spot market at, say, $5,000 a ton, then your operating costs are around about $45 a kilo of lithium hydroxide. And that's why I think that we're much closer to the bottom of the down cycle than a lot of commentators are suggesting, because a number of the bulge bracket banks, who we have referred to in the past, and we won't do so by name here, but they're calling for prices of lithium to go down to sort of about $11 a kilogram, and maybe $15 a kilogram. In my view, that is not possible while spodumene concentrate prices are above $4,500 a ton, $5,000 a ton, because it won't be economic for those merchant converters in China to operate at those prices. So they won't be operating at those prices, they'll be closed. So we know really where the cost curve support is for lithium prices, and it's probably around about $40 to $45 a kilogram, not $11 to $12 a kilogram. So that's really my view, that prices have come down or are coming down, but are now much closer to the marginal cost of production. And then the other view in terms of the upcycle is inventories. And obviously we keep a very close eye on what inventories are doing in China. And I think a lot of commentators look at inventories in absolute terms. So they say, well, inventories, for instance, for lithium carbonate, which is one of the key lithium chemicals, they look really high. I mean, they've blown out to almost, 70% of the level that they're at in 2018 to 2019. And they have. But the point is, you've got to look at it in days of consumption terms. Because if you look at consumption of lithium now, it's about what, 2 or 3 times what it was in 2018, 2019. So in days of supply terms, inventories are much, much lower than they were in 2018, 2019. In many ways, inventories look a little bit depressed at the moment because we've seen very, very weak activity in China in December, January, beginning of February. But once activity starts to ratchet up, probably towards the end of March and into April, we think that there's going to be a big squeeze in inventories, and therefore that's going to squeeze up the price quite rapidly. So that's why we think, I couldn't say to the next week when the lithium price will trough, but we do think that the lithium price is coming towards its trough and will start to recover, possibly into the end of March, maybe into the beginning of April. When you look at China, you don't look at January data, you look at January, February data together because of the impacts of the Lunar New Year, and activity is always depressed. And it's extra depressed this year because a lot of the migrant workers in China have gone home, have been allowed to go home for the first time in 3 years. And they've been quite slow about coming back to their jobs. And that's one of the reasons why weak activity has lasted longer than we would have expected to. In December, I was expecting a restocking event to come in February, but now it looks like the restocking event won't come until March, possibly the beginning of April. But we do expect that restocking event to come.
Okay. I want to pick up on a point that you mentioned about, it's the spodumene price. It's not the spot carbonate price. I mean, the lithium watchers generally, everybody just like focuses on that China spot carbonate price.
Mm-hmm.
Should we change and focus on spodumene? Like I've argued, and I continue to argue that there's a spodumene duopoly, right, between Pilbara and kind of Mineral Resources / Albemarle, and it was the discipline of Albemarle shutting down Wodgina and Pilbara shutting down, what was Altura, which has created this great price experience that we're having in lithium, because converters used to be squeezing Altura, used to be squeezing Pilbara, and now the shoe's on the other foot. Do you think that's right? And with the advent of Sigma is coming on stream very soon, Core is in the market, Piedmont, Sayona are in the market. So those are three, plus, but the Wodgina is going to be integrated with Albemarle and Minres, but just those three new deposits of spodumene coming on. What do you think about that, and just potential impact on the spodumene price, and should we really just be focusing on the spodumene price and this dynamic?
Well, I think it's important to focus on both prices. So obviously the lithium carbonate market is much bigger than the spodumene market, not in terms of tonnage, but in terms of sort of impact on the battery space. But so the lithium carbonate market is, gives you an indication of the overall health of the space. But certainly for now, and probably for the next 2 or 3 years, the spodumene concentrate price is going to be important for the reasons that we discussed. And I think your point about the duopoly of sort of Minres and Pilbara is, a very important one. With regards to the new supply coming into the market, I don't really expect that supply to be enormously impactive until the second half of the year. All of these projects, if I look at all of the lithium projects that have started up in the last 5 years, have all taken longer than expected to come up to commercial production. So I'm not really expecting a huge amount of excess material in the market until the second half of the year. And even then, compared to the sort of tonnages that are coming out of Pilbara and coming out of Minres, it's not a huge amount of material. So I'm not so worried about that. People have got to be realistic about what a super cycle looks like. A super cycle is not sort of prices continuing to increase over the next 5 years. A super cycle is about prices being on average at a much higher level. So, if you look at the copper price chart between, say, 2002 and 2012, that's an example of a super cycle. Copper prices averaged a very high level, but they were very cyclical around that. And I think that's what we expect to see in a super cycle. So, can lithium carbonate prices, lithium hydroxide prices average $60 a kilogram over the next 5 years? Absolutely, for certain. But will there be potentially very substantial fluctuations in price over that time? Yes, there will be as well. So in my view, the super cycle, stronger for longer, still applies. It's just that we're going to see a bit more cyclicality of pricing within that. So I think that we will see prices move up, into the middle part of the year, and there is a potential for prices, possibly to move down after that. But I do expect prices to remain at a very substantially elevated level. And, there's a lot of people out in the market, analysts out in the markets at the moment with regards to lithium, saying, well, how can lithium prices remain so high above the marginal cost of production for such a long period of time? Well, number one, they're not actually massively above the marginal cost of production for the reasons that we discussed earlier. And number two, in an environment where there's an underinvestment in new supply, we've seen in the past with the base metal super cycle in the late 2000s that prices can remain at elevated levels for 5-10 years if there isn't enough supply in the market. So, I would also disagree with that view.
So just if I can slip in here, Matt. So back in my old life when I ran a mining book in London and did base and bulk metals, you'll remember nickel got very tight, got to $50,000 a ton. The Chinese weren't having it. They introduced nickel pig iron, much lower content. Price of nickel plummeted back to whatever it was, $8,000 a ton. So the question is, it's very clear, given that there aren't enough spodumene resources in domestic China, and so they don't have that availability, is they are looking, it would appear, to solve the high price riddle, because in the end, the average cost of a car in China is much lower, and they want to export to the rest of the world. So they want to make their markets competitive. And we don't have to get into the CATL debate, but I think broadly speaking, it looks like it's very specific companies that are looking to be saved by those pricing reductions. Is China looking to replicate the nickel pig iron moment and disrupt the lithium industry with sodium ion and with lepidolite?
So I'll take the lepidolite question first of all. I don't think it's looking to disrupt the lithium industry. I think it's looking to...
Well, sorry, I mean to try and get the price, bring supply.
I think it's looking to get the price down and keep its own industry profitable. I'm not overly worried about the lepidolite capacity in China. Yeah, on sodium ion, really interesting situation. Had a lot of conversations about this over the last sort of 2-3 months or so. Sodium ion will never have the energy density from a scientific point of view that an LFP battery can have. I think the other thing about sodium ion is that, yes, it looks very interesting now when demand might be a couple of gigawatt hours a year, but will prices in the value chain be impacted if you take demand up to 100 gigawatt hours a year or 500 gigawatt hours a year? Because we heard all of these arguments for LFP. LFP is much, much cheaper. Well, LFP 5 years ago was much, much cheaper. But then when you tried to upscale the supply chain, it put all of these pressures on through the supply chain and prices went up, costs went up. And that's a risk for sodium ion. Potentially I see applications for sodium ion in stationary storage, and I potentially see us in 2 and 3 wheelers. And I am excited about it because, let's face it, we need something to help on the lithium ion side.
Okay. I want to turn in a second to Tesla's Investor Day and a discussion there. But before doing that, just want to make our own advertisement here for RK Equity. Anyone watching, I'd encourage you to come to our website and register your email if you haven't already, because we send out a lot of stuff by email in addition to Twitter and LinkedIn. And this video will have an extended cut, for our Patreon viewers. So I would encourage you to subscribe via Patreon. We'll have a link put up here, and please subscribe to the channel. But the biggest thing I want to advertise is that RK Equity and Rockstock Channel are putting on its first ever conference on March 21st. This is going to be all virtual, and it's going to be called Canada Rocks. It's going to focus 100% on what's happening in Quebec and Ontario, in particular with spodumene producers there. But we're also going to feature a little bit about graphite. And Matt has graciously agreed to speak, and moderate there, as well as Katie LaChapelle at Canaccord, David Deckelbaum at Cowen, Ernie Ortiz, Lithium Royalty Corp, and Ken Brinsden is going to give a keynote fireside chat. So stay tuned on Twitter and LinkedIn for some more detail about that. But quick comment on graphite. I saw your interview on miningeducation.com. We're not going to cover graphite too much here, but what was the takeaway for that? And as a quick advertisement for this conference and more coverage of graphite in the near term by ourselves.
The situation hasn't changed. We have a huge underinvestment in the sort of midstream graphite space. So We don't really have a shortage in upstream projects, but we have a huge underinvestment in midstream anode materials, spherical graphite, coated spherical graphite projects in the Western world. And, you know, of all of the 10 or 12 projects that we count under development at the moment, we need all of them to work, and we need all of them to work straight away if we're going to fill in the expected graphite gap. And realistically, given, you know, what we've seen in the space over the last sort of 4 or 5 years, probably some of them are going to be delayed. So, you know, we are quite from one point of view worried about the graphite gap, but from the point of view of investors, excited about the potential for a graphite gap. But yeah, I mean, it's definitely a space to watch. And in terms of the magnitude and the impact for investors, I think it's really exciting because nobody really understands graphite, and I think there's huge upside potential. And I think the graphite gap could be as important as what we've seen in lithium. I mean, if you look at the lithium ion cells, you know, what are the constant materials? Well, it's lithium and graphite. And if you don't have graphite, you don't have lithium ion cells. So for me, people need to do a little bit more research on what I think is going to be potentially a really exciting segment in the next 4 or 5 years.
Yep, I think so too. Unfortunately, Graphite doesn't have like an Albemarle Live and an SQM equivalent, educating investors about them on a quarterly basis. So that is a reason for this knowledge gap. But but Syra is now public and producing, and they've gotten U.S. funding. So I would listen to them. I think Nouveau Monde is listed in the U.S. and they're going to be at our conference. So enough about graphite for now. Let's talk about Tesla.
I believe a couple years ago you had a patent on sodium chloride to extract lithium from some clays and spodumene clay and things of that nature. How does that fit into the plan of maybe bringing real innovation into a mining sector that could use a little, maybe waking up and getting those costs down? Because that could be a real gating factor, it seems.
Well, we're going to address whatever we think the limiting factor is at any point in time. So we would like to do the least amount possible. So we don't want to get into the mining or refining sector. We will do that if we have to. I do think the focus really should be on refining capacity. We need to make just a very giant amount of anode cathode lithium hydroxide, lithium carbonate. It's really the refining capacity that is the biggest choke point.
Did you hear anything new and exciting out of Elon's mouth, Drew Baglino's mouth, that they fully understand, where the bottleneck is and are addressing it?
No. No. It was from the point of view of battery raw materials, it was pretty much the same old from Tesla. I mean, which isn't to say that they didn't say anything interesting. I mean, what they said was really fascinating. It was a really great day. I don't get the impression, I still don't get the impression they've really got their head around shall I say the raw materials industry? I mean, they made a big song and dance about this lithium hydroxide refinery that they're building in Texas. And Elon's been quoted a number of times as saying that, refining is where he sees the bottleneck. And also he's been quoted a number of times as saying there's no shortage of lithium in the Earth's crust. And completely agree with that. Absolutely no shortage of lithium in the Earth's crust. What there is a shortage of economically developable deposits of lithium. And there's a shortage of funding to get those deposits into production. And, in my comment on the battery day, I talked about this sort of new industry that needs to get off the ground. And this industry is called the concentrating industry. And it takes basically lithium from a low grade in nature, and it upgrades it to a point where it can be refined into a battery raw material. And that's really the issue that we're dealing with here. And looking from outside, you go, well, I need to invest in this concentrating industry because it's obviously the key bottleneck for the energy transition. And then you mention to investors that actually this concentrating industry has a different name, and it's actually known as the mining industry. And they go, oh no, we can't invest in mining because it's a dirty industry. And we're not going to invest in that and it's non-ESG compliant. And that's really the issue that we're having to deal with, that the mining industry is really struggling to get, investment. I mean, I track this data every month in Battery Materials Review, and last year the lithium industry funding raised was 20% down year on year. That was in a year when lithium prices went to an all-time record, multiples of what they've ever been before. Yet funding was down 20% year on year. And you're sort of sitting there scratching your head and going, well, what needs to happen for funds to actually flow into this industry? So, yeah, I mean, really, it was kind of same old, and I'll get off my soapbox now and let you guys have a crack at it.
It's important what you say, because like spodumene in situ is like 1%, right? Concentrating it to 5.5 to 6%, right, is one stage, but it needs to get to 99.9% from there. So it's important what you say, the difference between concentrating and mining. And in fact, Albemarle got a grant from the Department of Energy for their Kings Mountain mine in North Carolina, but it wasn't for the mining, it was for the concentrating, right? It was spodumene concentration. So it's interesting. So you still have, and I asked Jigar Shah about this, as well in our interview there. Do you think that that's like Elon really doesn't want to get into mining because he's concerned that everybody just doesn't like mining? Like there's all the speculation that he might buy Sigma and he just poured cold water over all, and he said, like, he made a false parallel, in my opinion. He said it's refining versus finding lithium, right? And he had a chart there which actually showed that when there's a shortage, the amount of reserves or resources like goes up. So he showed like nickel and lithium, the resources are there, right? But a lot of it is low quality, low grade, and not easily extractable. So I think from just say finding versus refining, that's not the issue.
Yeah, it comes back to this issue of resources versus reserves, and I think it's not understood by people in the industry. A reserve is an economically extractable resource. Without wanting to swear, there's shed loads of lithium around. There's shed loads of lithium around, and but the number of projects that are economically extractable, that's the key thing. And the mining industry has proven over the last few years that it's more difficult than you would think to mine this, but two, to concentrate it. And I think that there's a step missing. There's finding it, and then there's refining it, but in the middle there is mining it and concentrating it. And I think there's a lack of understanding about that as a step. And I think one of the reasons why Elon is very wary about talking about the mining industry, getting into the mining industry, is because automakers have been in the mining industry before and they kind of got their hands burnt because they don't really understand that industry. The other issue, with regards to mining as opposed to refinery, is that the material that you are concentrating is not chemically consistent. So if I look at a hard rock lithium deposit, there will be different chemistries and different mineralogies in different areas of that deposit. And I think that if I look at Tesla, they're used to dealing with very consistent materials, already purified materials that then go into their cathode factory, and then the cathode comes out and that goes into their vehicles. So they're used to dealing with pure materials. You don't get that in the mining industry. It's a very the chemical makeup and the mineralogical makeup of rocks is very different at different areas of the deposit, at different timelines within your mine and everything. And I think that there is a real lack of understanding of that in the downstream industries, and also how to get around it. They're very distrusting of this industry that's taking like a very commodity product that's dug out of the ground and turning it into something that's a little bit more concentrated. So I think that's one of the reasons why he's very wary about it. I mean, he
Yeah.
was quite disparaging the mining industry.
Yeah, but this guy reinvents everything. So just because car companies didn't do well in mining, in the 20s and 30s and 40s, doesn't mean that he can't do it better. I think it's interesting. There have been some disruption or in Tesla's procurement area. A lot of people have left the company recently. One left to join a lithium major, another left to join GM, and soon after that person left, he signed a deal with LAC. And one left for Rivian. I find
we've actually seen that in a number of the OEMs. So, for instance, in the European OEMs, there's also been musical chairs. So I think there's a lack of I think there's an annoyance in the procurement departments that the OEMs haven't been acting quicker in terms of locking up supply, and maybe that's what's finally moved some of the OEMs to lock into some of these deals. But certainly, the number of departures at Tesla must be disruptive to
so Matt, here's the thing: is you noticed in that investor day there was no talk of the low cost vehicle, of the smaller. So I mean, in order to make that fly, I know they're manufacturing efficiencies, etc., but you would need to have a very good lock on supply and price of your raw materials, and particularly lithium, to make that work. So I still find it somewhat odd that you look at the percentage of the cost of the battery now that's lithium, that you would not do both, lock in supply and lock in price.
I mean, I would agree with that, and you, me, other guys in the space have been saying this for 4 or 5 years, and the OEMs just haven't been paying attention. So it seems to me the most obvious thing in the world that it clearly isn't to the OEMs.
The other thing, of course, is that if you say, I don't like mining, then take a guess what happens when you try and permit and do everything else when the OEM says, I don't like mining. Well, who is going to like mining?
Yeah.
It's I understand, one needs to do it properly and so on, but there's a lot of, if you do a DMS only, a dry stack tailing, whatever, shipping it is, are you saying that doesn't fly? I don't, it doesn't.
I mean,
it's an existential crisis for them.
Yeah. To me, you don't have to have the best mining operation in the world, but at the end of the day, if I'm producing, lithium hydroxide, say, at a cost of, say, $12 a kilogram, then surely that has to make more sense to me than buying it in the open market at $65 a kilogram, because that's really impacting my margins. I mean, it seems to me to tick all of the boxes. And even if I'm not the best miner in the world and I'm not the best converter in the world, these are not, it's not rocket science running these operations. So, maybe you don't hit your 70% recovery target for spodumene, maybe you only hit 65%, and maybe you don't hit your 90% target for lithium hydroxide, maybe you only hit 85%. But surely it's got to be cheaper than being exposed to open market prices. And I guess that comes back to the CATL, news that came out sort of in the last week or so as well.
But again, that was my question earlier. If you look at the names of the OEMs, all Chinese, and then you look at the production volumes of those companies limited. So is this again, are they looking to help their local industry survive and let someone else across foreign shores fall over who can't get access? Because the question is, what percentage of total volumes that CATL has in mind, because I've looked at the benchmark graphs and what they plan to expand to or whatever, how much are they really giving away at that price?
Well, if for their own production, it will be enormously profitable for them at that price, if for their captive production. But if they're buying in the open market, one assumes that they would be buying at a loss, or they'd be making a loss on that material.
Yes, so I'm saying it's gamesmanship. So on a tiny portion, they're sort of doing this jiggery pokery, and then they're hoping that the whole industry comes off and they can buy.
I mean, I don't think the industry is that stupid, to tell you the truth. So, you know, it's a nice ploy by CATL, but I'm not convinced that the industry is going to fall for it.
But do you think, I mean, do you think they've been nudged to support the local OEMs?
Possibly, but I mean, possibly they've been nudged, you know, a little bit from upstairs, but also on their own supply, it makes sense because you've almost got a guaranteed offtake then, haven't you?
Yeah, but I mean, show me a business that sells something for 200,000 that can sell it for 400,000.
Yeah, I don't know. I can't tell you what's happened. I can't tell you what. I mean, my gut feeling is they're trying to push the mining industry into a corner. But if you look at the amount of volumes of cells that they're going to supply on that deal, it's really low.
And that's what I'm saying. It's a fractional amount. So it feels as if there's a concerted effort in the China spot market and with CATL to try and set the market up so that when new uncontracted spodumene mines come online, the going rate is being set at a lower price.
Yeah.
So can you shift the industry?
That may very well be the case, and maybe that would work if it was just China in the market. But you know, there's so much demand. I mean, you talk to any of the sort of juniors that we talk to on a regular basis, and they'll tell you that the auto industry is beating down their doors to get in and sign up this material. So it's too little too late in the market. I mean, whether the market has been weak for the last 3 months or not, I don't think that's going to have any impact on the market.
So while we're on that, you know, we've seen transactions where it's ex-China signing up spodumene deals, but we know there isn't conversion capacity outside China to take that material. So is this trend towards tolling in China going to pick up?
I think in the near term, yes. So, I mean, obviously, what's happened in Western Australia has proven how complex it is to actually open lithium refinery operations. You know, everybody's been delayed by between 6 and 12 months, and costs have blown out as well. So, you know, we tend to look at the China merchant hydroxide refiners as sort of a really easy business, but clearly it's not quite as easy as you might think it is. And you know, coming back to Tesla, that makes me wonder if on that very accelerated timescale that they've laid out, it's going to be actually possible to do what they are intending to do.
Yeah. So on that, Matt, they've got some of the best engineers in the world. They said they would be at 100 gigawatt hours of annualized 4680 production by the end of last year, and they were at 4.
Yeah.
So, and my understanding is they're shipping dry electrode in. So when he says we're doing batteries with dry electrode, it's not being produced there. It's true, but it's being imported.
Yeah.
So,
and I mean, that's in an industry he knows. So
exactly,
you know,
there's my point.
Something that they've never done before. So, you know, I always say, I mean, I said in my blog, I like what Tesla say, but I always take their timelines with a pinch of salt.
Look, it's in our best interest if they could make it work, because it would mean ex-China conversion capacity taking off.
Yeah. I mean, I as I said, I hope they can make it work, but I'm not expecting them to make it work in the time that they've given.
So, Matt, on that, the lithium hydroxide refinery showed a picture. He labeled it as 50 gigawatt hours. I think Rodney equated that to 30,000 tons of hydroxide, which is twice what we estimated a while ago when we saw a number out there for the cost of 350 million. And 2 years ago, when they signed the original deal with Piedmont, it was for like a certain amount. It looked like it was going to be a 15,000 ton. Maybe it's a 30,000 tons, but he's equating it into kind of 50 gigawatt hours. But I found, and we'll play the snippet here, you know, what he said about this was just like, it's a new process. Okay. It's a soda ash, no acid roasting, sounded very much like the Metsu Outotec process that Piedmont is using, and Keliber is using in Finland, in contrast to what Albemarle is using at Kemerton, in contrast to what Albemarle and Minres are using in China. And he was basically saying, this is going to be commissioned in 10 to 12 months. Okay, considering Tangshi's problems at Kwinana and Albemarle's Kemerton, just leave that aside for a second. But then he basically said, we're going to do things differently. And we're doing this because we have to. If you read his body language and Drew Baglino's body language, when they talked about cathode and they talked about this hydroxide, they really don't want to do it, right? Like it really felt like they didn't want to do it. But they're basically saying our suppliers aren't moving fast enough. But he basically implied that we're going to do this soda ash leaching, more environmentally friendly way to make hydroxide. And then we're going to teach our suppliers. We're going to teach Albemarle how to do it, right? What do you think about all of that?
Well, good luck. I mean, if they can construct a lithium hydroxide refinery and get it, production to spec in 11 or 12 months with the new technology, then I think they've earned the right to teach everybody else how to do it. I mean, there's no denying the fact that if you look at the presentation, you look at the whole presentation, they have impressed in terms of, for instance, the factory footprints. I mean, the factory is, using his numbers, 75% smaller and 65% cheaper. So these are his EV manufacturing factories, not to do with lithium hydroxide, but over the last sort of 4 or 5 years. So, I think one of their aims has been to lower the footprint of factories, to make them more efficient. And clearly he's hoping to apply that to the lithium hydroxide space. But, we just have to see if he can do it. And, he may very well be able to do it, but maybe he won't be able to do it during the time. I mean, I can understand perhaps it taking longer for the Chinese lithium hydroxide converters to build capacity and whatnot. But, Albemarle is a chemical company. And they've been doing this sort of stuff for a long, long time. And, for a industrial company to turn around and say, look, we can beat a chemical company to setting up these assets, you just got to wish them luck and say,
Yeah, I'm not. They have a lot of mechanical engineering.
One thing in this is also, if you look at the contracts that they have, there's Piedmont, there's Liontown or whatever, and you were talking about how homogeneous is the material that you feed through here. There isn't enough coming from a single supplier here, let alone whether that material is consistent. They're going to be mishmashing their spodumene.
Yeah, and I mean, that hasn't worked. I mean, or if that does happen, your recovery goes down. So if Liontown, for instance, is late or somebody else is late and you have to buy spodumene from another source, that's going to impact your refinery. So, yeah.
So if you look at how they're piecemealing it, just taking 50,000 tons, which is, let's call it 7 on an LCE basis, and then another 7 somewhere else, and so on, this is going to get interesting.
Yeah, very, very interesting. But, maybe it'll be a big learning curve for them. And they'll say, actually, this is more complex than we thought. Maybe we better pay the professionals to do it.
Yeah, but so I think this is why when Howard said the body language, because if you think about it, the stakes are high here now.
Yeah.
Now you're stepping into a different ring. We've already had the salt and water story on clay. So if you don't make it on this one, then you're saying, it's a busted flush, and lithium is hard.
The comments about
this really comes back to his comments at the beginning of the presentation, when he talked about 100% electrification being 240 terawatt hours of cells. If you do the maths on that, that's something like 160 million tons of lithium carbonate equivalent. And we're producing 0.7 million tons per annum now. So
yeah, but the whole thing is like Dr. Evil, it's bajillion, you start, in pieces, you can't jump to to the theoretical numbers. You start with reality.
Yeah, Yeah.
The body language, the body language and the actual language on the clay was even worse, right? Where they basically said, yeah, we've done some tests, whatever. Like, I think Rodney was offline, kind of joking that this is kind of like the Nikola, sliding the truck down the hill.
Pushing.
Pushing
it
was the
so
equivalent
funny
of
last
the clay.
time, when he was like, oh yeah, totally blasé, just a bit of salt water and bam, it all drops out. And of course when he made those remarks, it absolutely stuffed the lithium producers and developers. They all dropped like 20 or 30% in the next 2 weeks until reality set in.
Let me switch to GM and Lithium Americas. LG Chem wrote a check for Piedmont. I see Sayana's in a trading halt with respect to a capital raise. I don't know if that's going to be tied to their bit of the offtake. I think Piedmont alluded to, maybe making some introductions or synergies there. But GM has definitively decided that they are getting into the mining business. They've written an equity check, and they're going to write another equity check. I think they're LAC's biggest shareholder, and they could go up to 19.9%. This is for mining and refining. And what's interesting, and they just broke ground. So there's some politics there. I'll notice as soon as GM, announced this investment in Lithium Americas, Judge Due and all of the other regulatory, and legal hurdles seem to have quickly disappeared. So I think I've always said Mary Barr is the most politically astute. You led Mary into this is a Fordlandia-like moment to a degree. This is the most ambitious project, in lithium, I think that's ever been undertaken. 40,000 plus 40,000. I mean, the headline number when Lithium Americas announced it yesterday, is going to be 80,000 tons. But after many years of, we're going to do carbonate, we're going to do hydroxide, they have come and they've basically said, we're going to do carbonate. But, the Hummers and those lyrics, and GM's prior agreement with Livent is focused on hydroxide. LAC has indicated that they will not build hydroxide in Nevada, but they might build it somewhere else. I've speculated maybe they'll partner GM, Livent, LAC will partner somehow, to do the hydroxide piece. That's just my own speculation. But they have started construction, but they're not yet fully funded, right? So that's an interesting thing. But they seem to have high confidence, and Jigar Shah was on our show, like that they could get up to 75% debt for this project. That would be like a $1.7 billion check out of $2.3 billion stage one CapEx. What are your thoughts on LAC just and this development of an auto OEM coming in? LAC, gave GM 100% of the offtake for 10 years plus another 5 with a right of first offer. In that, I haven't yet fully analyzed all the details of that deal, but there was a lot of it was unusual in a lot of ways, right? That to tie yourself to one partner, in this manner. But like, what do you think overall? And the stock has barely reacted, since all of the positive news. What do you make of that?
I mean, I think it's a difficult one. I mean, from the point of view of the sedimentary lithium, from my point of view, it's still an unproven technology at the commercial level. So I think, there is a risk. There are technical and operational risks with the development of the project. For GM, it's a relatively small amount of money. It's probably an option to secure lithium supply on that project. The other thing that slightly worries me about the sedimentary lithium projects that we talked about before is sulfur and sulfuric acid, because if all of those projects are developed, there's going to be huge demand for sulfuric acid for those projects, unless some of them go down the chloride route, which doesn't look likely at this stage. So there are some issues, with those projects. I fully hope that they get off the ground and they're developable, but there are definitely some risks up front. So I think that the price looked okay for GM on a transaction multiple term. A lot cheaper than the sort of hard rock assets in Australia and in Canada and Brazil. But there's a reason for that, because hard rock is a plain vanilla tech, whereas this is still, I don't want to call it an experimental tech, but unproven at commercial scale, I think is
on what metric are you saying? I mean, I noticed that like GM invested, LAC's price was near its 52-week low, but on a
so it's a two-part investment.
Yeah.
and the initial part is really in the asset, and then the second part is in the sort of company. So I mean, I understand that they're both equity investments, but the first part is effectively just going to the assets, isn't it?
I'm not sure about that. I think they invested at parent level, half of it.
Yeah.
And then there was some conditions precedent coming before they put the second tranche in.
Yeah.
And
anyway, I mean, just to give you an idea, it was about $97.50 per contained resource ton, which is obviously materially lower than the sort of multiples we've seen for the hard rock projects, but probably justified, given what we've seen before. I mean, that's certainly more expensive than, for instance, the early prices that Ganfeng paid for Bacanora. Those are on lower multiples, but then probably you would expect that given what the lithium price has done over the last couple of years since
and Mexico political risk, right? So
Mexico
all of these, this is a very inefficient market, and trying to compare valuation metrics, per contained
very difficult
lithium,
because there are so many moving parts.
I think there are a lot of unique circumstances in connection with this project, which was under legal dispute for 2 years. Here we have GM, Government Motors, politically well connected, partnering with a very large deposit, right? To prove, like, will clay finally have its day? Like I've talked about it. This was the project, that I first got involved in lithium because of, and it was for the first 7 of my 14 years in lithium, it was the only one that I talked about. So I very much want this to get into production. They're talking about it being in production, I think, what was it, the back half of 2026? They're starting kind of construction now, again, not fully funded. That's a 3.5-year timeline, $2.3 billion for phase 1. So what do you think? Like by the end of 2026, this will be on time, on budget, and in production?
Well, experience has taught not. I'll always give the benefit of the doubt, but plan for the worst. Experience has taught that none of these things come in to production on time and on budget. So we'll see how they do. Hope for the best, plan for the worst. That's all right.
I want to make just a couple more comments before we wrap up here, and that's just government policy and government funds availability, in various locations. And the United States, again, big money Biden strikes again. The Department of Defense now, through the Defense Production Act, he put in an executive order which essentially says the cap of $50 million is no longer there, right, in what you could spend, because previously the Department of Defense, could have written, up to $50 million to do, R&D, studies, etc. They've waived that cap. And they've also made it clear that they can invest in mining. So that's it. And that also could be invested not just in America, but, in Canada and other countries. And Canada is one of 5 countries that's considered a domestic source, in the US. So that's further big news, in the US. But, I see in Europe, they keep talking, but in March, there's supposed to be the Critical Minerals Act coming out. In Ontario, I saw a headline yesterday that they're kind of getting their act to get like where it's making a difference as to where investments are coming, right? These other countries and regions are griping about the U.S. has moved too aggressively after berating the U.S. for being a laggard on climate, right? Europe is now saying, wait, it's not fair. You're giving away too much. So what's Tom Schmall of Volkswagen, made a plea on LinkedIn that we got a match. This is kind of like a race to the top, not a race to the bottom, or just like a leveling of the playing field with China. What do you make, of what's happening in Europe and in Canada?
Yeah, I mean, I think that Europe has kind of surrendered its top position in the climate area with a kind of a whimper. Europe was one of the first movers in this space, in electric vehicles, in batteries, and then they've spent the last 5 years talking and not really doing very much. But I think the other point is that you've got two very different approaches from the US and from Europe. If you look at it split into the carrot and the stick approach, the US is very much using the carrot. It's proposing tax credits, incentives for producers to come to the US. The European Union has always used the stick approach. I mean, when we started looking at the EV sector 5 or 6 years ago, if we remember that the European Union was threatening to fine OEMs for selling too many ICEs. So that's really been very much its approach over time. It's been about regulation, whereas the US is almost about free business, effectively. So trying to encourage people rather than beat them over the head. And I think that shows a very substantial difference in approach and difference in thinking between the US and Europe. And I realistically think that it's something that will be very difficult for the EU to reverse, because I don't think the EU is in a position to offer incentives across the whole Eurozone. And the EU as a body, I'm not sure can actually offer what the federal government can offer in the US. And I think the other point about that is the federal government can make an offer for the US, doesn't have to particularly worry about what's happening at the state level. Whereas the EU can't say the same. It has to get the buy-in from all of the different countries that make up the
point. Yeah.
So it's handicapped by that. And we see that situation at the moment with regards to the auto industry, where we're actually seeing in the last couple of weeks the Germans break ranks on the recent rules on electric vehicles and say, look, we'd like to include ICEs using synthetic fuels because they're clean. But you know, so the EU doesn't have the strength that the federal government has got in the US, and as a result, the rules are likely to be a little bit more of a hodgepodge and less distinct and less strong and strident than the US government is able to offer. So I think that's a key consideration. We're not really seeing an improvement in understanding of the mining industry from the Europeans. In fact, I was just reading a report today about how Finland is tightening up its mining rules, its mining development rules, so that now local communities can have more of a say in terms of how easy it is to develop mining projects. And you know, what we want to see is planning regulations being loosened for new projects, not tightened, well, not loosened but streamlined. And you know, we're just not seeing that. We're not seeing the same strategy from the EU that we're seeing at the country level and at the state level. And that's where the EU is going to be handicapped. And I don't see that it can possibly rival what the IRA brings to the US.